Good day, everyone, and welcome to the webinar. My name is Kabelo Sintumedi. I am one of the senior technical consultants here at RIBCCS South Africa. It is my pleasure to present this webinar to you. Today, we will be discussing post-tender checklist and job remodeling. This is where the site team takes ownership of the project budget by sourcing better buying from suppliers, adjust productivity, as well as alternative construction methods to improve financial control on their project. I will aim to keep the webinar within the allowed time frame of approximately 60 minutes. And due to the large number of people logged in this webinar, we will not be able to answer any questions during the presentation. However, please submit your questions during the webinar with the provided function on screen. Afterwards, we will collate these questions and send the answers to everyone that registered for the webinar via email. Please note that the webinar will be recorded and you will receive a link to download it. We plan to host a webinar once a month on various Candy topics. Should you not be able to attend the webinar at the given time frame, then please still register for the webinar as you will automatically receive a recorded copy. Now, without further delay, let's get started. Here are the points to be covered for today's webinar. Why is it important to remodel at post-tender stage? Post-tender checklist, job setup for post-tender stage, job analysis, including some reports, as well as value engineering or remodeling. First in hand, why is it important to remodel at post-tender stage? The estimate created by the tendering department can now be used for project control on site, and this allows for the following adjustments of production, so the site team can take ownership of the job and they can now revisit each of the worksheets and adjust production to what they believe will be achieved on site. Better production from 25 to 30 cubes of production per day, and you will see clearly the indication or the effect that it has on the net rate from 1413 to a decreased rate of 1396. Also, we're looking at construction methods. So worksheets can be built with local or global variables used as switches, which makes it quicker to switch and check different scenarios. For instance, the use of ready mix instead of side batching. So for this typical example, a switch has been applied to the worksheet to indicate prices of side batching option 1 and ready mix option 2. So by applying a switch, we can have a clear indication of how our rate will be for side batching as compared to using ready mix or vice versa. Therefore, different construction methods can be applied by the site team to reflect how they intend executing the job on site. Also, better buying. So let's assume that the site team will purchase ready mix cheaper from a local supplier. So they are able to purchase ready mix at 1050 as compared to their original rate of 1115, and you will see by better buying it also decreases further the net rate. So these are some of the advantages of remodeling at post-tender stage, and just as my previous PowerPoint slide, better production. So production may be adjusted to suit the site team, which can even better the rates. Construction methods. So use ready mix instead of batching on site, which creates also less utilization of resources. Negotiate for bulk discounts from suppliers and cheaper subcontractor rates. Rectify worksheets which have been underpriced in Candy. and then baseline the profit margin of projects before the site team can start on site. I hope my explanation with the use of PowerPoint have highlighted the importance of job remodeling for post-tender stage. Now, on the next topic of today's webinar, I'd like to take you through our standard post-tender checklist that can be used as a guideline for our Candy users. It is essential to do the following checks on every new project under the Estimating Application tab before setting up the initial valuation setup for the job. This is important especially for users that do have their BOQ linked to the program to avoid their focus being moved to the next month's period. All 5 stages will be covered in this webinar. Stage 1, we will go through the job setup, where we copy the job, do a job cleanup, explanation of a selling rate, what is a bid rate, and how can we use the bid rate, final quantities. Stage 2, we're looking at job analysis, a few reports that can be looked at, as well as some post-tender checks. Stage 4, it's job modeling, where we go now live into the job, better buying by decreasing our resource, revisit worksheets, and see how we can better our job or our calculated markup. And lastly, we're looking at the job codes, which we're not going to really touch in too much detail, but also to highlight the importance of having these codes in place as one of our post-tender checklist. I hope you find our standard post-tender checklist quite useful. A copy of this checklist can be made available to our Candy user as a guideline, so as to make sure important steps are checked for post-tender preparation. Next on our agenda is setting up our job for post-tender stage, and we will be using our post-tender checklist as a guide. Right, so stage 1, which is the job setup under the post-tender checklist, it is a copy job, which means duplicate a job. Now, this is part of a good practice to make a copy of the job before remodeling it for post-tender stage. And you'll notice that you will have 2 copies of the job, which will be available. The original tender job, and of course the duplicated job, which we've renamed now to Remodeling for Post-Tender use. Once we have the job, we can access the remodel job, and the next step is to clean up the job. So make sure that the job contains codes and resources that only belongs to the job, so that when you report, you don't have to go through extra unused resources and price codes. So therefore, we have to make sure we open up the price code list in this job, which may contain price codes not used in the bill. And we should consider deleting all these unused price codes, which will result in having less price codes to check. And the job will therefore only contain the price codes used in the bill. And as part of the screenshot on the bottom half, you open up document 1.1, which is your price code listing. And you also have an option to list all the unused before you can delete all unused price codes as displayed. Similarly, unused resources can also be deleted directly from the resource list. This step can only be done after the unused price codes have been deleted. So also on the resource list tools, option to list all the unused resources, as well as delete all the unused resources, including key resources as well. Now that we've covered point 1 and 2, the copying of the job, cleaning of the job, we now introduce the selling rate, how to preserve your bid rates, and also copy final quantity, and why do we need to do so. Starting first with the selling rate. The selling rate is used as the contractual rate for printing the interim payment claim to the client. It is therefore one of the important checks at post-tender stage. As you can see, we do have the net applied markup of 10%, which generates the gross rate. Now, the gross rate is ideal for tender stage and is a calculated rate based on the net rate plus the applied markup. However, the gross rate is not ideal for post-tender stage because any changes made on the net rate through the job remodeling will change the gross rate, and that's exactly what we don't want. And therefore, the selling rate would be ideal. It's mainly used for post-tender stage as the contractual rate. Adjusting the net rate or the applied markup will not affect the selling rate, and it's therefore ideal for post-tender stage. A calculated markup column is available and calculates the difference between the selling and the net rate. So as part of an example, we've got a net rate of 100 and we've got a calculated markup of 10%, which is worked out from the selling less the net expressed as a percentage. So 110, which is the selling, it becomes a contractual rate with the client. Should we feel the need of us better buying cheaper subcontract rates, construction methods, and our rate becomes 90, you will therefore see that the selling rate it's still retained, and therefore backwards calculation of the selling net expressed as a percentage is that 22.2%. How do we copy the selling rate from the gross rate? So remember, the selling rate can be directly copied from the selling rates, from the gross rate, or entered manually under the selling column. And to copy from gross, right click on the selling rate column header, and on the right click menu, select copy selling rate from the gross. And also displayed, you will be able to see that the selling markup column, it is available when you customize any of your bill of quantity documents, and it is the selling markup column. Once the selling rate is in place, we can now preserve our bid rate. By preserving the bid rates, we are taking a snapshot of all our current net rate before any remodeling is done. And once they have been preserved, a non-entry column of the bid rates can be displayed on our BOQ document. As you can see, any bill of quantity document customized the net bid rate and the bid rate amount column is available and can be added as part of your bill of quantity documents. And to preserve them, click on main, preserve the bid rates and quantities, and they will be copied onto the bid columns, the rate as well as the amount. As I've previously mentioned, this is just to take a snapshot of your net rates so that when you remodel, at least you have a base of what was your initial allowable at tender stage and how you've actually remodeled it, and you are able to analyze your bid versus your net. Now for this example, with both the selling and the bid rates in place, let's just assume the diesel price has increased and that the site team needs to factor this change at a post-tender remodeling stage to show the effect that it will have before going on site. So as you look at the bottom half of my screen, the resource diesel has a rate of 11.5, and if I were to go and increase the rate to 13 per liter, you will be able to notice the increase for all these earthworks items getting affected because they are plant intensive. So the top screenshot, it reflects the original job when we've preserved the bid and copied the selling without any remodeling taking place. But the bottom half shows the changes once we increase the rate of diesel from 1150 to 13. And you can see that the bid is still retained, the selling it's still retained, and the net has changed because of the prices of our diesel affecting the gross. And at this point, we no longer, consider the gross, but use the selling when we submit our interim payment to the client for every month. So just to go through the columns. So the first column on the bottom half of our rates and amounts is the bid, which is actually the exact snapshot that was taken from our net rates before any changes was made. And as you can see, the next sets of columns, it's actually the net rate that has actually changed because of the diesel rate. And the applied markup, which obviously with the new net applied 10%, the rates of the gross are affected, and obviously those are not the contractual rates that we gave to the client. But with the selling in place, we are able to analyze our new calculated markup as well as retain our selling rate, which are now contractual from the client. So when remodeling takes place, the net rate will change and affect the gross rate, but not the selling rate. And with the bid rate preserved, we can always have an indication of our bid versus the net. Also, if you want to analyze the difference between your selling and your gross, that can also be done. And also have a clear indication of our selling markup, referred to as a calculated markup. With the final quantity, the bill quantity will normally be used for the first final value projection, and as a starting point can be copied to the final quantity column. Please note, any remeasure done to the job will only be captured against the final quantities and not the bill quantities. And all the variation order items will only have a final quantity and not a bill quantity. How to copy a final quantity from the bill: right click on the column header and select copy final quantities from bill. And there's all the quantities. And also just to mention the importance of the final, they will be used for any remeasure and additional variation order items. With all the tick boxes covered under the job setup stage 1 of our post-tender checklist, I hope that now everyone has a better understanding of exactly what we've covered or what needs to happen during the job setup. The next topic, it's our job analysis. Certain useful information like the contract value, the job size, etc. can be analyzed with the various reports that are available. And these are a few reports that we're going to go through. The first one, it's the trade total display, where we're looking at how the job has been priced. It will give us a clear indication, and we can analyze the job obviously from a net, gross, and selling. Value analysis, 80-20 rule of thumb, 20% of the bill items that contribute 80% of the contract value. We're also looking at the resource percentage, the key resource. Instead of looking at it from a bill, we're looking at it and analyzes analyzing it by resource. Confidence check, worksheet calculation line check. We'll also look at some of the post-tender checks, pricing check reports for block split and unpriced items, as well as some resource checks. If you want to look at or display all the old rates and the dates of all the resources in the current job, and be able to see if you can source out the latest rates. I will now switch live to Candy and run all the listed analysis in my Candy job. And currently in my Candy job, I've ran through the whole stage of my job setup for post-tender stage. Therefore, I've duplicated my job. That was one of the processes that we've went through. I've also cleaned up my job and delete all unused price codes and resources. I've preserved my bid rates, and I've also copied my selling rate as well as final quantities in place due to time. I will also display all of those information on my current documents. So I'll access the job, and the first thing that I'm going to take you through is our trade total display. So the trade total can be used to analyze the job's net, the gross, the selling values per trade. The split values are also displayed for each trade and are a good indication of how the estimate was priced. So for example, if I had to only highlight the painting trade with a value of 208,200, you will see that the whole entire value is allocated under the subcontractor resource type. So this clearly gives me an indication of that painting has been priced using subcontractor rates or quotations and so forth. And secondly, we're going to have a look at our confidence check. So you'll notice on the very same trade total display document, there is a confidence check button. It is also accessible using the review menu under estimate. So if I click on review, the first option on the drop down menu, it's the confidence check. Right, so open up the confidence check. It is useful to identify possible problems in the estimate. For example, the unpriced items, you will have an indication of how many worksheets it's in place. If you don't have any split rate pricing, any provisional items and resources that have been marked in the current job, data copied from the master, selling rates are also listed, and you can also be able to look at how many rate only items you do currently have on the job. Quite useful information to have a look at. Now moving on, we are also going to further use the review menu. It's got quite useful reports for post-tender checking, and one of them that we're going to have a look at, it's the worksheet calculation line check. So I'm just going to quickly open up this, and this will highlight the potential errors found on worksheet calculation line. So for example, if there's a space between the percentage sign and the word waste, then the wastage report would not include the resource in the analysis. If any of your variables have a missing bracket, the values will not be properly calculated in your worksheet or in your job. So also, because of our free format calculation worksheet, we can easily make a mistake of putting a text between numbers. For example, 1.09 instead of 1.09. And this can definitely affect the value of our current calculation and job. So certain special tools and facilities are available on the worksheet, and they require these special syntaxes, identifiers and control characters to function correctly. So it is very essential that this report is run prior the tender submittal as well. So I'm just going to click on OK. And if there was any of those mentioned errors, missing brackets on your variable, space between your percentage and the word waste, it will print it out for us. Right. The next post-tender check analysis that we can have a look at, it's under review. And we're going to check for any unpriced plug or split by using the pricing check. And by selecting this, we can either use the price code in the price code list, which means these are all the price codes used in the job. Even if we use the price codes on the direct cost bill pages, it's exactly similar because we've deleted all the unused price codes. So mainly I want to check for any plug or split, and this is a quicker way of me being able to pick. And also there's other additional information. If you wanted to make sure that all your items do have a selling rate, this is quite a useful function to also use. Click on OK, and a report that I can preview. If it should pick up anything, it will list for me any of those items, price codes, and the type of mode of the pricing, whether it's plug or split for that particular item. Right, so I'm back at the review. The next report that I'm going to take you through, it's the provisional listing worksheets. So if I go to provisional listing, select this option, you'll see that there is 3 options there. So at tender stage, the estimator may mark a worksheet, resources, as well as bill items as provisional. And the main reason they would probably do so is to be able to track those items or resources or worksheets and revisit them at a later stage when finalizing the tender. So for example, marking a worksheet provisional could simply mean that the production applied needs to be verified or re-looked into before any submission gets to be done. So any of these can be checked, and that would be the purpose of using marking all worksheet resources and bill items provisional. So I'm looking for worksheets and preview. Should there be any worksheets that the estimator had marked provisional, it will be able to pick it up and list it for me under the report. So for now, no provisional worksheets. Now when it comes to resource check, so resource check, I'm going to open one of my customized resource document. So it's a normal resource list, duplicated, renamed, and it's my resource list with a date stamp. So if I quickly go and customize this document, just to indicate the column layout, you will notice that I've just added column 4.2, which is part of the date stamp. And at this stage, I want to look at the date of resource rate change. Right, so there are a few columns that can be inserted there as well. So for now, I'm just going to open this one quickly and size it and increase my document. So resources can be checked for potential problems like outdated rates, as I've mentioned. And you can customize the resource list and include the dates that the resource were created, as well as the date when they were last actually changed. And it is quite nice to just right click on the final rate column header and do a sort in ascending, and you'll be able to see some of the oldest dates rate change for these resources. And this is quite nice, and this will give you an indication that when last were these rates updated, because we all know that the estimator, or when it comes to estimating, time is always against us. Right. Also, we have an option of doing a filter, and we can filter for resources that are marked provisional. And as I've previously mentioned, it could be that the estimator wanted us to finalize later the rates of buying those resources locally or etc. So now I'm going to skip to the estimating report manager. So the blueprinter, and I'm just going to display two of the main important reports that I would like to share with everyone. The first one is the value analysis, and the value analysis report, it's actually used as an 80-20 rule of thumb analysis to identify which items contain the high value, and these high value items will be our high priority and will be the first item focus on at tender and post-tender stage. So we really want to take care of these items because if we make a major loss of those items, that's where bulk of our money it's positioned or sitting. So if I may quickly customize this report, it's one of the old style report. With my final quantities in place, I will select my final quantities and the percentage of total to be printed. I've preset it to be 80% of the contract value. So if you wanted it to give you an analysis up until 100% of the value, you are able to select up to 100%. Click on OK and quickly preview the report. So you'll see that my bill of quantity, it's got about 7 to 8 pages long, but only a few 14 items contributes about 80.12% of my contract value, and they are listed from high to low value, meaning my 20 MPA in foundation, the value it's about 5.9 million, and that's about 20% of my contract value. And it's followed by my high tensile rebar 16 millimeter diameter, and that's about 2.1 million, and that's carrying 7.51% of my contract value. The other columns is just cumulative, so it takes the 5.9, adds it to the 2.1, the sum, it's about 8 million plus 2 million, 10 million, and you can see that the whole entire job, it's about 28 million, of which 22 million values carried by only these items, and that is obviously the cumulative percentage displayed there. So quite a nice report, to highlight critical items so that when the guys are pouring concrete in foundation, I rather put more precaution there because that's where the money sits and etc. The next one, instead of looking at bill items, we can do a similar approach but on resources. So value analysis can be performed on resources to identify which resources contain high value and will be the first resource focus on at tender and post-tender remodeling stage. So also just to take you through resource percentage report, customize and to show you my presettings. I've done a primary sort by resource type, so that means I want my report to display and group my resources by type. So all the labor together from high value to low value, all the plant high value to low value, material high value to low value, and only the simple resources that I would like to analyze. And my selection on quantities will be final quantity, preview, and you will see exactly as I've mentioned all the labor from high value to low value, all the plant and all the material. So I'm just going to scroll through this report and I'd like us to have a look at the material portion. Right, so the material from high value to low value, the one that's carrying most of the value under material, it's my bags of cement, 31,000 bags of cement needed. That I'm buying each bag at 75.82, and that the value is at about 2.3 million, and this is 18% of my material value, and it carries 8.31% of the contract values. So I'd like to focus on these and prioritize them and make sure that there's not too much theft happening on site. too much waste of these bags of cement. And I would rather also try and negotiate for a cheaper rate from suppliers so that I can also make a bit of calculated markup there. And it's followed by the high tensile steel, also about 238 tons needed, and that's about 1.8 million. This is 14% of the material value and 6.52 of the contract value. So ideally is you want to pick, your top 10 instead of focusing on your 0.01%, which is your nuts and bolts. So it is actually better to lose 1% of 10,000 than 1% of 10 million. Right, so I'll quickly switch back to my PowerPoint and go through all the tick boxes that we've covered: the trade total display, the value analysis, the resource percentage, looking at key resources was the last report we had a look at, confidence check, worksheet calculation line check, pricing check, as well as the resource check. So with all the analysis observed, the site can now make meaningful decision and can also be aware of any critical information that needs to be managed with proper control, such as the high value items, the 80-20 rule of thumb, 20% of the bill items which carry 80% of the contract value, and also identify all the key resources in the job. Right, this takes us to the next topic, or the last topic, which we're going to cover. It's the value engineering or remodeling as well. I'm also going to run the whole value engineering or remodeling live into the Candy software. So first on the list is check for plug and split rates. So plug and split rates must also be converted to worksheet to generate the complete resource budget. And once the bid and the selling rate is in place, any plug and split rates can be converted to worksheet to view either the loss or the gain that these items may carry, as per my previous demonstration. And also looking at better buying and revisiting of construction methods. So the site team can now revisit each of the worksheets, and they need to adjust the production to what they believe will be achieved on site. So we're going to look at better buying. Better subcontractor rates are also considered. The site team also agrees on the production in the worksheet and re-looks at the construction methods also used. And also, by doing this, the site team, they take ownership of the project budget and they can manage the productivity and alternative construction methods to improve the financial control of the project. Explode macros, so micro price codes must be exploded so that progress quantities may be entered. And lastly, we'll look at the job coding. So let me switch back into Candy and further demonstrate the job remodeling. Under estimating, I'll open up the document manager and I'm going to switch to the estimating application tab. So I've got a few documents that I've customized, so duplicated, renamed, and customized with the relevant columns. So 1.2a, BO quantity with bid and net. So this is one of my customized documents. And as you can see, it's got the bid rate as well as the net and the selling rate. So the net, it's exactly being copied or preserved as the bid rate. So I'm just going to move quickly to our page number 1, where we have our concrete item, and my main focus will be on item L, concrete in foundations. So this item, I'm going to open its worksheet. So you'll notice that currently there is the preserved bit rates, which is exactly the same as the net rate. So any remodeling hasn't taken place as yet. So double click, and I'm just going to quickly size this to full screen. So looking at this worksheet, you will notice that there is local variables as well as global variables. I'm not going to go into too much detail in that, but that can be used to actually, you know, create switches and also a quicker way of changing values within your calculation in your worksheet. So for example, our local variable here, it's being applied for production purposes. So wherever we have PROD, it is actually that 25 production. So if I change one here, it changes wherever it's been used in a worksheet, and it can only be defined in this worksheet. A global variable, it affects globally. So if it has been used throughout different worksheets, if you change it where it's been defined under the definitions and settings, it will change wherever it's being applied. It could be a price code worksheet, it could be a complex worksheet, etc. So for now, I'm just going to look at our construction method. So revisiting our construction method, I want to look at our rate if we were to use ready mix instead of batching on site. So currently our rate is 1417, and I'll quickly go to the definitions and settings, and this is where we would initially define our global variables and apply it to any worksheet that we would want to use it. Right, so if I change the value to 1, it will change the value to 1 wherever this has been applied. 1 minus 1, making this a 0. And obviously as an applied factor, it will zero out the side batching, including the placing of the labor. But if it's 1 applied to ready mix, it will then kick in the ready mix value. Right, so quickly change my construction method. This is quite useful when it's actually being created in a master, so that the site team can be able to analyze this quicker during the remodeling phase. So I'll change that, and you'll see that my rate changes from a mere 1417.63 to a 1304.39, giving us obviously a decreased net rate and obviously a calculated markup later on. Right, so this is one of the job remodeling by construction method. We can also look at better buying. So better buying, I'd like to revisit my concrete, for example. So I'm just going to store my worksheet, and I'm quickly going to open up one of the standard resource document. So I'll go to resources, and I'm going to use document 1.3, which is the base rate, percentages, and text and currency documents. So just to zoom in a little bit in this document. Right, so I'm just going to mainly focus on the ready mix for now. So I'm going to scroll with the use of my heading level structure in place. It's easier for me to navigate and get to the ready mix concrete. Click on calculate so that the usage can be populated. So I have a clear indication of how much am I going to spend on each strength of concrete there and the value. So if I were to go and put a base rate, so a base rate can be copied from the final rate, and remember currently the final rate, it would be the one that gets used onto your net worksheet. So I've copied my final rate as my base, and let's assume that I can approach my suppliers and negotiate for a 5% discount. So I'll use the discount column, and you can actually see that it's taking the initial base rate of 1030 minus 5%. It's about 978. And what's also nice is we are able to see what was the initial base value and what is the discounted amount. Obviously, if it had increased, we will see the surcharge amount as well there that we're going to incur over and above. Right. So just by changing that, this means better buying. So I go to my worksheet. If diesel has increased, and unfortunately I cannot do anything about it, and we have to make sure that we put that and factor it into the job and so forth, and close this resource list. So if I go back to that worksheet, and I'm just going to quickly double click and open up the very same worksheet, you'll see that the rate has changed from 1115 to 1059.25. So it's a further reduction of my rate, and it's no longer 1304, but it's 1244, which also gives us a better calculated markup of our job. So calculate my job, and then also I'm going to open up a similar document that has, in addition, the applied markup, the calculated markup, and the gross, for us to be able to see the effect on the job itself. So switching back to my customized document, open 1.2b, zoom in a little bit on this document, and I'm just going to close on my earthworks. And as you can see, my markup on the ready mix concrete items, it has actually increased as compared to the normal applied markup. So this is what we mean about revisiting your construction methods, mean about better buying. So you go to your resources, you see how much you can be able to save and negotiate from suppliers. If you can better your production, you are able to also go and change your production within the worksheet. So that means if I'm looking at that very same item, currently sitting at about 25% as a calculated markup, if I am able to go to the very same worksheet and the site team can be able to achieve more production instead of 25, and I'm making it 30, store the worksheet with the selling rate in place, my calculated markup increases further from a 25% to a 27%. Right, so now we're going to have a look at macro worksheets. What is a macro worksheet? A macro worksheet is actually a complex price code with a makeup sheet in a form of a mini BOQ. So the items in this mini bill are price codes or other macros, right? So macros also have a price code, but the code starts with a number. So what I've done in this current job is for me to be able to easily or quickly track down my macro items. So just close this current document, is that I've actually selected one of the attributes to color in any macro price code in my preferred color. And doing so, it's just a matter of going to the blue hammer, and if I slightly go to my item and attributes color, I can be able to select that I'd like to see my macros either blue or red. If I were to change that to red, you will notice that it will turn to red. And as I've mentioned, that a macro also starts with a number between a 1 and a 9, and this represents the hierarchical level where 9 is the most junior level. And then the second character, it represents the trade of, or the valid trade character. And the balance of the code, it's a free format, and the complete code must not exceed more than 8 characters wide, right? So when you create a macro, you first start by creating a price code in order for you to be able to get a macro worksheet. So as I've mentioned, it's like a mini bill. And if I double click and open it, you'll be able to see that it comprises of excavation, it comprises of backfill, load and dispose, and each and every one has a worksheet behind it. If I double click, you can actually see the detail of these macros. Right, so the main purpose of the macros is as follows. So I'm just going to quickly scroll down for a typical example such as manholes. So a macro price code for pricing items like manholes that consist of various elements, and each element having its own quantity and the rate. So for example, we need 30 manhole, and each manhole is about 11,329.81. So that means if 30 of these manholes, 10 of them excavations has been done, how do we then progress it at post-tender stage? We would normally go and say 10% of the 30 manholes. It's the allow or the claim for the month or the actual for the month, which tends to be incorrect when it comes to post-tender. So that's the main reason why we want to explode it. We want to explode it so that we are able to progress each manhole that has been excavated. For example, one manhole excavated, that's about 3.9 cubic meters. So by exploding it, it will take the 3.9 and multiply it by 30, meaning give us a full volume of all the items that are needed for these 30 manhole. Right. So to explode the macros, it's as simple as right-clicking on the column header, and then when you right-click on the column header, you go and select the option to explode macro price codes. Explode macro price code, and we want to explode them right up until our level 9. So selecting this option, click on yes. You will notice that all those items, one manhole, it's about 3.9 cubes. If you multiply it by 30, it gives us the full cubes needed for 30 manholes. So if you really did 10 manholes excavation, what's quite nice is you are able to put your actual quantities against the correct one, so that when you're doing your cost reporting, your allowable is quite accurate and you are matching apples with apples. So also what's nice is you'll notice that all these manholes, the net rate, the internal items, these are all internal items, meaning if you were to print a selling rate document or evaluation, these items will be excluded and only external items will be displayed to the client. And these external items, they only have a selling rate, they do not have a net rate, because it's allowable, it's carried by the internal items. And also these internal items, they do not have a selling rate, and therefore we always use the contractual rate agreed upon with the client. Right. I hope that creates a bit of clarity when it comes to the macros. And I'm just going to quickly touch on to the codes that we regard as quite essential, especially when it comes to post-tender. And the first two codes that I'm going to touch on, it's the cost codes. So the cost code and the group code, they are defined under the definitions and settings, which is the blue hammer. And they are both resource related, meaning they get defined here and they get allocated against the resources. So a cost code would be a ledger code, which you would get from accounts as an organization. You can import them directly from Excel into Candy, or it can be entered in manually. And then the group code, also it's known as the supplier code. So I've got a list of suppliers that I'm going to source material from. So by defining this code, allocating it against those resources, I can print a report that will indicate how much am I going to spend against each supplier. Again, that's one of good reports that you can be able to approach these suppliers, give them an indication of how much you're willing to spend or how much you're going to spend, and you'd like a bit of discount on those values. Right, so let's have a look at first the cost codes and the group codes. So if I go to the blue hammer, I'll switch to the resources tab, and under the resources tab there is a standard document 1.7 resource group and cost code allocation. Right, so this document has got the relevant columns, and these are the columns for allocations of the cost codes, also known as ledger codes, and the other one, group codes, known as supplier codes. Now, one thing to know about both these codes is that we cannot allocate group or cost codes to complex resources. They only get applied to simple resources, because a complex excavation gang, it comprises of all these simple resources which have been allocated with a cost code or a group code. Right. So what's nice is we can quickly run to check any of the resources that do not have a cost codes and only simple resources. So right click on the column header of your cost code, filter for blank codes, cost code simples only, and no items found on this match filter. So it's quite nice to actually make sure that allocation has been made against these. Also we can run a group by, which is quite nice. We can group all resources by cost code, and you'll see cost code no allocation. We only want to see those complexes to make sure that they are not allocated with a cost code or a ledger code. And ideally, my cost code have been summed up into high level. So all the sand together, all the stone together, and all these information, I mean, it needs to be agreed by each organization on how they would want to go and report. Right. So that's just my cost code allocation, and quite useful for my cost reporting. And now we can also look at our group codes. So our group codes, if I simply go to my material, you'll notice that I've allocated a couple of group codes that I've defined. And remember, any one of these codes, if I want to reallocate a cost code, it's just a matter of double clicking on that relevant column. It will pop up a list of all the defined ledger codes. Same with the group codes. If I double click on the group code column, it will list all the defined group codes that I have. What's nice about this is I can also quickly run a group by group codes, and it'll group them by my allocation. So the first one, it's my ABC aggregate suppliers. So I'm going to have an indication of how much am I going to buy from that supplier. The same thing with cash build. I can be able to have an indication of how much am I going to buy from each supplier. At the ready mix concrete as well, you are able to see how much you're going to spend, and you can further go and negotiate and so forth. Right. And then lastly, the code that I'm going to go through, it's the task code. So remember, the cost codes are limited to control cost on productive resources, and the cost codes provides a resource-based control for managing fixed resources such as material, but provides a limited control for productive resources such as labor and subcontractors, as well as plant. So what Candy does is it provides a simple method of summarizing bill items into tasks, so that you get an allowable for each bill item broken down into various resource types. So immediately there is labor and plant allowable for each task, which is the exact information required to control productive resources. So task codes, known as activity codes as well. It is also defined under the blue hammer, the definitions and settings 2.1. This is where you list all your task codes. Once they've been listed, there is a document that I've customized which has the relevant task code column, and this is where the allocation gets done. Right, so the columns, we can quickly run a filter to check whether allocations has been done to all the bill items. So filter, unallocated task codes, and immediately a filter toolbar indicating there's 3 items, and I can quickly make my allocation against those items. So this one, it's excavation, and lastly I've got also the manhole. Alright, so once that has been allocated, abandon filter, and I need to recheck and run the filter as well. So even this option to filter for blank, it will do the same filter, or I can simply go to that and check no item of this filter found. It is also quite nice to run a group by so that you can see how the task group has been utilized, and all these items are grouped together. And really the key is to allocate the same task code to the bill items with similar production. So for example, bulk earthworks items would be summarized separately from hand excavation. So bulk earthworks, we know that we're going to utilize a plant, and hand excavation would be labor intensive. So we've ran through all the checks. Check for plug and split. It's one of the reports that we've previously looked at on stage number 3. And better buying, where I've changed my concrete, ready mix concrete for 5% discount using my base rate in place. I've revisited the construction methods where I've changed the production, where I've also switched from side patching to also using ready mix, which is quite useful. I've also explained some macros as well as went through some job coding. So for more information regarding macros, cost group and task codes, please make use of our help center facility and search for these topics where either an article, which is a PDF document, or a video will be available explaining all these. To access our help center, you simply click on the support menu in Candy and select the help center option on the drop-down list. Also stay updated with upcoming webinars where Candy coding will be presented in detail. I'm sure you will agree with me that Candy is continuing to be a leader in the estimating and project control software. Thank you for your time, and I trust that you will find these features useful in your daily use of Candy. Please remember to email your local CCS office if you want to know more about these features. We will keep you informed of the next webinar. And remember, if you cannot join on the selected time, then please still register and you will receive the recordings, which you can then watch in your own time. Enjoy the rest of your day and see you at the next webinar. Goodbye for now.